Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we talk about our income idea, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com or click the link in the description. We like business development companies, or BDCs for short, like today's income pick, Hercules Capital Inc., traded on New York Stock Exchange under symbol HTGC, because they provide capital to high growth, innovative American companies. They also happen to be providing this money in high interest rate environment, which helps Hercules make a lot of money. With the name like Hercules, you better be bringing something big to the table, and it is. John?
Yeah, thanks, Mo. Hercules Capital is the largest BDC focused on providing senior secured venture growth loans to innovative venture capital-backed companies in a broad range of variety of technology, such as life science and sustainable and renewable and special situation verticals. Special situation companies use Hercules senior loans to grow and develop their businesses during times of change or inflection points that are not readily served by typical financing. Now, since its inception in December 2003, Hercules has committed more than 17 billion to over 600 companies. And some of the companies Hercules has invested in over the years, and I'm sure everyone's heard of these ones in particular, include 23andMe, Annie's, which makes organic foods, Art.com, Fastly, Game Logic, Impossible Foods, and Zoom Media. What it doesn't invest in is equally as important. It does not have any direct exposure to oil and gas, metals, minerals, crypto, or cannabis. Now, the majority of the company's debt investment portfolio consists of first lien senior secured loans, and that accounts for about 83.1% of all its loans. The majority of the company's debt investment portfolio consists of first lien senior secured loans at 83.1%. Of its asset-sensitive debt investment portfolio, 95.5% is priced at floating interest rates. That's significantly above the industry average of around 80%.
John, I was reading Hercules' record second quarter investment income was up 61%.
Yeah, the portfolio's massive exposure to floating interest rates makes Hercules well positioned to generate a lot of money in a rate-sensitive environment like the one we're in. Now, in the second quarter, Hercules announced that total investment income increased 61.2%. year over year to a record $116.2 million. Record net investment income, meanwhile, was up 88.6% at $75.7 million, or 53 cents per share. Now, year to date, which is equally important, total investment income was up more than 61% at a record $221.3 million. Record net investment income rallied 86% to $141.2 million. It also reported record total gross fundings during the first half of the year of $834.8 million.
There's something interesting here as well. Unlike other BDCs, Hercules provides base distribution. You usually see this in, oil companies.
Yeah, definitely. It's an energy thing, but Hercules does it too. It maintains a variable distribution policy that aims to distribute 4 quarterly distributions that account for 90% to 100% of the company's taxable quarterly earnings or potential annual income. On top of that, the company's board can pay an additional supplemental distribution. Now, based on its record financial performance, underlying strength, and its portfolio and growth of its private funds, Hercules board actually increased its quarterly base distribution to 40 cents per share, along with a supplemental distribution of 8 cents per share in the fourth quarter. So that works out to 48 cents per share per unit, or $1.92% on an annual basis, for a current yield of 2.1%. Of particular note, this represents the third base distribution increase in the last year and 12th consecutive quarter of paying a supplemental distribution.
I see the shares are trading near record levels.
Yeah, Hercules dividend payout is on the rise, and so is its stock. In fact, on August 7th, Hercules stock hit a new record intraday high of $17.54. That was a little more than a month ago, and Hercules has managed to hold on to those gains. As of this recording, Hercules Capital Inc. stock is up around 12% over the last 3 months, 40% over the last 6 months, 34% year to date, and 31% year over year. Now, longer term, Hercules has been providing shareholders with pretty remarkable gains. It also rebounded quickly following the 2008, 2009 Great Recession and 2020 pandemic. Over the past 20 years, with dividend reinvested, Hercules stock has actually returned profits of 700%. That's more than double the 341% return by the S&P 500.
All right, John, thank you so much for your analysis. Hercules Capital Inc. has been a great BDC for decades. This is due in large parts to its underwriting skills and kind of companies it invests in. Since 2012, its total investment income has expanded at a compounded annual growth rate of 12.7%. Net investment income has grown at compound annual growth rate of 14.6%, and total investments have increased at a growth rate of 10.4%. The company also provides one of the most reliable frothy dividends in the industry too. That in this market is supported by a strong floating rate loan portfolio. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.